Yeah, okay, we should be live
Bam.
as of right now.
I'm sending it
Or
everywhere.
at least I hope we are. So, all right. Just waiting for some kind of confirmation in the YouTube studio that we're actually live. Does it come through on your end?
I'm waiting. Yes.
Sweet.
Yes. Yep.
All right, cool. That's amazing. Now, if I could just figure out how to participate in the whole chat thing on there at the same time, that would be sweet. First time using StreamYard, so I'm a little bit discombobulated, but it seems like the best way to do stuff with guests. So I'm going to start with a question, Ryan.
I'm ready to be grilled.
All right. So you started investing well beneath the age of 18, correct? Around 14 or so? Now, that means you've been investing for what, three and a half years, something like that?
3.5, yeah.
Yeah. So, because you mentioned you're on the cusp of your birthday in your Jeremy challenge video, right?
Yep. 18 in November. Yep. So.
All right. So you got some time to train.
We've been training. We don't get ready. We stay ready.
Damn straight, son. So, all right. What is your total portfolio size now across all accounts? I don't know if you have more than one
across
account.
All. Yeah. Some of it's my money, some of it's not. The one that's my money, we're at 19 right now. 19,076, around there.
So, haven't even had your 18th birthday yet. You're at 19K. Where do you see your portfolio size by the age of 20?
Hopefully we get things rolling on YouTube. We get stuff coming in, and I could see by 20, 30, 40,000, maybe 50 if I really, yeah, depends. I think 30, 40,000 we can get there, assuming we don't have a crash.
Gotcha. So you mentioned you were going to be going to community college. Were you planning to work in tandem to continue your contributions to your portfolio?
So right now in the summer, that's where I get most of my investable income. I do like landscaping on my own. Honest to God, we'll have probably where if I get monetized on YouTube, and it'll depend how that will be. I'd obviously prefer to do that over a part-time job and just keep learning on here and working on YouTube. But if that's not the case, we'll go with probably a part-time job and other things to fund my addiction.
Dividend stocks, not drugs, right?
Yeah, dividend stocks, not drugs.
So, would you be planning on investing like the lion's share of your YouTube ad revenue, assuming you hit that monetization goal?
Yeah, I want to, obviously, I think I want to put a lot of it rather back right into the portfolio or the channel. Because I look at like some YouTubers, Mr. Beast, he like reinvests all of his ad revenue, thousands of dollars. So in my knowledge, if I can invest the money that I get from YouTube, obviously CPM is much higher for finance channels, and my demographic's a little older. So
that's
CPM's going to be.
We have, the demographic wise, we are in the sweet spot. It's men age like 18 to 55 is like the highest money. And that's like, if you look at your audience, it's probably like damn near 99% men, and the majority of them fall somewhere probably more in the 25 to 45 age range. Yeah. That's at least that's what I've seen on my analytics.
If I can take that ad revenue, reinvest it back into a plethora of investing softwares, microphones, cameras, all that stuff, new setup to improve the quality of the channel, and along like help myself as an investor, obviously with the softwares, and help other people. Like I know I'm gonna buy your partner or the memberships. So I want to do that. I want to just buy a bunch of, do stuff that not only like get like benefit for the viewers, but also like help support people who have
some capex.
Yeah.
Yeah, some.
We're not doing any Intel capital expenditures yet, so don't get too excited over there.
You're not building out a fab.
No, not yet.
Yeah, it's all right, man. I get you a good deal on some land in Rockford, Illinois, sometime if you need something to build out your new fab. All right. So, okay, so you're thinking 30, 40K by 20, depending on how YouTube goes.
Yeah.
At what age do you think that you will be a net worth millionaire? I have an answer, an estimate, and an answer to that, but I want to hear what your guess is on that.
Mid-20s.
Mid-20s?
I said when I started investing a few years ago, I said definitely by 30, I think I can get to mid-20s. If I, honest to God, the only things that's holding me back right now from going all in on everything, training, YouTube, all that stuff, it's school, straight up. Like if I could have all the time in the world and I could just focus on 2 or 3 things at a time, building the YouTube channel, growing as an investor, I think I could definitely get there earlier.
Okay. My guess is between 30 and 35. Just, if like that's assuming like everything goes like normal, YouTube doesn't necessarily blow up huge and you end up working like a regular job in either like accounting or finance or whatever, based on what you were talking about, your interests would be in school and that kind of thing. I think, in the early to mid 30s, I think it's 100% achievable on that trajectory for you because of how early you started. You've already got that compounding effect going for you. And, you've got like probably an 8 or 9 year head start against your peers for the most part. Most of them won't start until they're probably mid 20s with a boatload of student loan debt, probably won't really invest a whole lot outside their 401k or whatever. Yeah, I think that, you're for sure, like when you go to hopefully your 10-year, but definitely by your 20-year reunion, you're going to be flexing a 7-figure account. Roll up in your Lambo.
I don't know if I'll be there. I'm not a big fan of my school.
No, it's okay. I didn't go to any of mine either. Frankly, after the day I graduated, I never set foot in that place again. Except actually, I did have to sometimes pick up my younger sister from time to time. She went there after I did. So, but other than that, no, I never went back by choice, for sure.
Yeah, that's the plan.
For sure. So how do you feel about, the fact that you have such a big head start on people?
I like it. It's crazy when you think about it. Like sometimes I think to myself, like, what if I started at 21 and then I realize I'm 4 years away from the age of 21, which sometimes it's crazy. But then again, I don't want to get too cocky and ahead of myself and be satisfied this early and just stop investing and focus on other things. So,
gotcha. Yeah. So I'd like to invite the chat, throw out your estimates of when Ryan will become a net worth millionaire. Because I don't think it's a matter of if, I definitely think it's a matter of when, in his case. Now, all right, they want to know what your 3 highest conviction positions are right now. The ones you have the most confidence in for the long run. I think I could probably guess, but because I watch most of your videos, so I know what companies you're liking the most. But my audience,
would it be unfair if I said like Microsoft, Apple, and like SCHD? That'd be unfair, right?
No ETFs. Got to be individual stocks.
No ETFs?
Yeah.
Microsoft, Apple, Union Pacific.
Union Pacific. Okay.
I have a lot of them. I think I could hide. I have a lot of them that I'm convicted.
Other
than Microsoft,
the guy in the chat doesn't like Microsoft and Apple. He wants something else. But Union Pacific's good.
Yeah, Union Pacific, Berkshire Hathaway, and
so basically Apple.
Yeah, pretty much Apple. But
no, Berkshire is more than just Apple. I'll give you that.
It's going to be controversial, but Starbucks.
Yeah.
Starbucks, yeah.
Wow. So what is it that you love so much about Starbucks? Because it seems like every time we talk, you can't help but say how much you love Starbucks.
You know how Jeremy has his like stocks, and Kevin does too, like Tesla, the ones that you just like 10x on and do you believed it when nobody else did. That's one of the companies for me. I think it's definitely a business that I understand very well because I consume the product, not an unhealthy rate, but I consume the product admittedly.
Moderation, right, buddy?
Yeah. And I can see very easily why people go there and why people are addicted to the product. And every time I go there, it's always packed.
Yeah.
And I was in Toronto this last weekend, and there was literally a Starbucks around probably every third mile.
Yeah. It's definitely a high quality business. And, coffee tends to be pretty good margins if you're charging like $6 for a thing of it. And just,
I don't think Starbucks is an amazing stock, like recession proof wise. I think McDonald's would definitely be better for that. But I think long term, if everything continues it has been, we keep going up.
Yeah, McDonald's. Long-term, I used to hear that they could even do better in recessions in a lot of cases.
Yeah, because that's why it's up so much right now, or last year and now.
Yeah, I think a lot of people retreat into those kind of staple companies when tough times in the stock market are anticipated. Mm-hmm. So, you tend to see them just get out of tech and go into stuff like Coca-Cola, Pepsi, McDonald's. At one point in time, people even, might have done that with like tobacco companies.
Yep.
So we both have Altria Group in our portfolios.
Uh-huh.
Now this is sort of a sensitive subject, but Altria Group owns 10% of InBev, which owns Bud Light. As an Altria shareholder, what do you think they should do with their 10% stake?
That's it's
that's
just Bud. They have other holdings, right?
Yeah. So it's one of their strategic investments. They have about 10% of the outstanding shares of Anheuser-Busch InBev.
Can I look at Anheuser's financials real quick?
Oh, yeah, absolutely. I mean, in fact, I encourage everybody to pull.
What's their stock ticker?
BUD, Bud.
I mentioned, I was in Toronto this last weekend, and they are never going to be. There's never going to be shortages of people smoking. After the amount of cigs that I saw, I was. If you go to like Toronto, Pittsburgh, any major urban city, you will be shocked if you don't get regular exposure. So I see good free cash, large free cash flow, not a whole lot of growth, but like pretty large, somewhat consistent.
I mean, I'm not too concerned about the smoking part of the business. It's more just they own 10% of InBev, which at the moment is worth about $10 billion, right?
Mm-hmm.
So Altria has this, $10 billion sitting on their balance sheet in a business that pretty much just had one of the worst marketing foobars of all time, right?
Yeah.
So if you're sitting on the board of Altria Group, do you say, hey guys, let's offload this, $10 billion worth of Anheuser-Busch and put it into something better like our vaping business? Or
that's a thought, because I feel like there's a ton of potential with like cannabis. I think that's somewhere they need to. Obviously, the Kronos Group that didn't go too well, but
Kronos Group's looking at being acquired, which I don't know how I feel about that either. Speaking of Altria's other investments, but I do think that that's a big potential. right? Because if the regulatory environment in the US gets better, they're right across the border. They can just jump over and capture some of that opportunity. But
I would say,
I'm also, yeah,
mhm,
I'm
if the
also
price is
thinking,
right,
yeah,
I would do it. If
sell.
it has to be good price, though, I'd sell it. Yeah, but again, I'd be fine with either. If they hold it, they still have good diversification. I think now is probably the lowest time for Anheuser-Busch. And
Yeah, yeah. I mean, it may be, I always
it's a
say don't
lesson they'll
sell
have
the
to learn
bottom.
from. Yeah.
I keep saying don't sell the bottom, and this might be the bottom, right?
Yes.
Yeah, it's just one of those things. Like, do you think that Bud Light as a brand is ever coming back?
I did see some Bud Light in Toronto this weekend.
Yeah.
Dang, that because they were hit so much worse than Target. Uh, I think they will, but it won't be to the extent of what they were at.
So you think their best days are behind them, and they'll always be kind of a B tier brand?
Yeah.
I could see that. Yeah. Oof.
I don't know. I'm not an alcohol expert, so I wouldn't.
Yeah, me either. I
know.
mean, I wasn't really drinking Bud Light to begin with, so this doesn't really like directly affect me as far as like what what beverage I would be buying. But
It'll be
as a
interesting. So how it like impacts their financials, though.
yeah,
I'm curious to see that.
man, I look forward to next earnings. I think it could get a little ugly for them.
Yeah.
But yeah, I mean, honestly, I think if the valuation on InBev looks stretched, I think Altria is probably better off dumping it and putting it into their vaping business because they just acquired Enjoy. That has FDA approval. They have, of course, all of the distribution and everything they need to get it out there. And it's only 3% market share, so they got a lot of runway.
Mm-hmm.
And vaping ain't going anywhere, right?
No, it isn't. I witness it every day.
Absolutely. So, all right. SZ says, yeah, Union Pacific is spicy. I'll look into them. So, speaking of Union Pacific,
yeah.
So, tell them why you love Union Pacific so much. I already kind of know from your other videos about it, but they're curious. So,
you can't compete with them. It's simple as that. It's.
Whoa! Hold on a second. You mean me to tell me I can't just go out there and start a new railroad company? You can't. That's one business you can't start out of your garage.
You
right?
cannot. Yeah, you can't be getting a small loan of $1 million and building railroads up the Northwest. No, but I think another thing why Union Pacific is so bullish, and it's something that came out after I bought, was their CEO Lance Fritz was called out in a letter from a hedge fund, and he was called out for poor performance, and the entire and that got him to resign, and now they're calling Union Pacific out and looking at their financials, they look great. They're saying there's even more room for growth, more room for profitability, more room for potential, and with a railway company, that's kind of hard to find because large, consistent, slow boring company like that. So I think that's another thing.
I've heard people say the same thing about tobacco companies that, it may be that, smoking might be going down somewhat, but it's not like you can just start a brand new tobacco company and compete with the big guys out there, right?
Mm-hmm.
So, I mean, duopolies, right? Companies that are, either monopolistic or, have difficulty with other companies coming in and entering the market. That's kind of one of the drawbacks to tech, right?
Yeah.
Like a lot of those companies started in their garage, and their future competition might start up out of somebody's garage somewhere, right?
Yeah.
Now, granted, like that may not be as likely as it once was because, if somebody pops up, they're liable just to get bought out before they become real competition these days.
Yeah.
But, speaking of competition and buying people out, how's the Activision acquisition looking for Microsoft? You hear anything new on that?
It is a great day to be a Microsoft shareholder, and an Activision shareholder. So, as you guys know, the FTC, I'm not exactly a big fan of. And no, I'm not for monopolies, but like at the same time, there needs to be some solid regulation. So, recently, the FTC and Microsoft had a bit of a battle in the court, and Microsoft won. I think there was a very solid case for Microsoft, and Lena Khan, who is the chair of the FTC, who is initiating all this, she's had a big bias towards the 5 big tech companies. She's been writing bad papers about them since college. So there's obviously some bias there to try and slow down Microsoft's acquisition or business expansion into the gaming. So it's got passed in the US, and they're still waiting in the UK and Europe, I think.
Yeah, I did hear that the UK was being a little bit of a
There's
stick in the
pressure
mud
now.
about the whole affair.
But the good thing is there's pressure now. If you're a Microsoft or Activision shareholder, there's pressure on the UK. They don't want to be the odd one out on it.
That's true. They want safety in the herd. If they're the only one holding things up, there's pressure to capitulate for sure. So how confident are you that it's going to go through percentage-wise?
I was very confident in the beginning, and I'm probably 85, 90%.
That's about where I think too. I would say anywhere from 80 to 90% that it goes through at this point. And the market has kind of priced it that way, right? The target price for it, it's $95 is what Microsoft's offer is. And the share price is just over 90, I think, right now. So yeah. Clearly people think that it's more than likely going to go through. Because I don't think just on fundamentals that Activision is worth $90 at the present moment, but definitely with the synergies that Microsoft would gain from them, I can see why they're so interested in the company.
Yeah.
So,
wait a second, I'll be back. I gotta go let the dog out. I'll be back in a second.
Who let the dogs out? Who? So that's what you're gonna get from me for the moment. Is a little bit of light entertainment while he goes and lets the dog out. I encourage everybody to mention any kind of anything you might be interested in knowing. Go ahead and post it in the chat. Any questions you might want answered, and I'll be happy to get to them.
Rocky's going to get it. Not interrupting the live for that long. He'll pay for that later.
So, who let the dogs out? So, one question I've been really burning to ask is when it comes to valuation, that's the thing I preach is value, right? Oh, yep. Hey, we got greetings from Canada in the chat. Shout out to
Shamir.
Canada.
I was just in Canada. I cannot say that my experience was nice or pleasurable.
Whoa.
No offense to my Canadians, but it was not a fun time.
I bet Canada's nicer than Arizona right now. It's 106 here right now.
Toronto is like a homeless person's wet dream.
So is Arizona, man.
Drivers are not very good.
I go outside my apartment complex, and there'll occasionally be vagrants sleeping in the ditch next to their shopping carts and whatnot they stole from Winco. It's real out there, man. So, with regards to valuation, what are some of your favorite metrics for valuing stocks and determining what your target buy price is?
It all really depends on the quality of the company. Obviously industry plays into that, but if I really believe in a company, very high conviction on them, like Microsoft, that's P. Obviously, it's going to be the one I'm looking at. I also look at free cash flow yield, price to book. I've started to look at recently, but I would say P is the main one. I look at historical P. So if it's trading at a 30 P, like Costco, has always been trading there. And then for REITs, price to FFO.
Gotcha. So pretty much just a standard kind of price to earnings multiple or price to
I've also
FFO
been
per
looking at dividend discount model too recently.
Yeah, I noticed that. Wasn't that in your realty income, not
Yeah.
reality income
Yeah.
video?
Realty.
Realty, not reality. Um, so definitely, I actually kind of like the dividend discount model in some cases because ultimately, if you buy something like realty income, you're probably doing it more for the dividend than really any
Yeah.
other reason because
Mhm.
they're at a premium to their net asset value, so it's not really an asset play, right?
Yeah.
And with REITs, the PEs can be kind of weird and deceptive on them
Yeah. You can't.
because
Yeah.
all the depreciation and stuff, like you can't really rely on that.
Yeah.
And they don't really tend to do buybacks. They do more share issuances because they can
Funds
only
their
raise
business.
money for new buys with equity and debt because they can't retain earnings. And so
Yep.
it's like if you're buying realty income, it's almost like a bond. You're just buying it for the yield. And
Yeah.
the advantage though, um, for something like realty income over a bond, because some people might be like, oh, then why don't you just invest in a bond? Well, realty income does grow that payout over time.
Yep.
So if you buy a bond, it's the same yield for the rest of the time that you have it until it matures and you get your original money back.
And real
With
estate's a
realty income,
solid hedge against inflation too. I think you saw that a few years ago as
yeah,
well with their pricing.
yeah. You know, owning your own home, your mortgage, for example, is in a sense a hedge against inflation, right? Because if you
Mm-hmm.
rent, your landlord is liable to raise your rent a lot during high periods of inflation. I experienced that myself. I saw double-digit rent increases 2 years in a row, and I was not very happy about that. If you have a fixed mortgage, that payment stays the same, baby. And
Mm-hmm.
it becomes an increasingly smaller and smaller portion of your income
Yep.
while simultaneously inflation drives up the price of the home, and so the loan to value, the amount of leverage you have, goes down.
Mm-hmm.
Yeah, definitely not a bad thing to have a nice fixed 30-year mortgage at a low interest rate. Today's
Yep.
interest rates maybe not so much, but
Yeah.
the interest rates of a couple years ago, absolutely. So, how about direct real estate investment, like actually buying real property and such? Have you ever thought about that?
Oh, yeah. It's still. I think so. I mean, I was going to make it a goal to get into it in my 20s. I don't think that's. I don't want to do that anymore. I think I could if I really wanted to, and I hustled, I grinded, saved everything, but it just doesn't seem worth it. But definitely later on, I think it would be worth it.
Yeah, I would tend to agree with you. So it's one of those things where it sounds glamorous and awesome and stuff.
Yep.
Like, oh yeah, I own like 10 properties, 20 properties, whatever. But as soon as you get more than like a couple, the headaches start to pile up,
Yeah.
and it starts to feel more like you bought yourself a really, really, really thankless and miserable job rather than passive income, which, that's kind of what, if you want passive income from real estate, you could just buy Realty Income or
Yep.
VG, or heck, my favorite, Medical
Oh no.
Properties Trust.
Wow, 10 new viewers just came into the stream right as you just said that. Wow.
Yeah, yeah. Just pump MPW and your channel will grow. That's that's what I learned about YouTube. No, it's crazy because like that was definitely the first thing that ever like caught on, and it was crazy. Like I think it was just timing. People happened to be searching for it a lot, and there weren't a lot of people making
Mm-hmm.
MPW related stuff.
Do you think getting a
Have you looked?
property manager is worth it? For
Is
somebody that's experienced in real estate, do you think getting a property manager would be worth it?
uh it depends. Like
Yeah.
if you're out of state, like you live far from the properties, and you want somebody look after them so that you're not trying to figure things out from hundreds of miles away, you probably need management. But if you're local, in a lot of cases, if you're local and you have only a small number of them, it's probably better to do it in-house. Mm-hmm. And, if you have a lot of them, you might have the scale to be able to like have your own like kind of, helpers that you have on staff, Mm-hmm. I definitely think that it's harder to justify the investment if somebody's taking like 8 or 9% off the top, which is, a pretty typical amount that like a third party manager might take. Mm-hmm. So, you've got to have like a lot of like fluff, a lot of buffer, a lot of cash flow to be able to justify, paying that manager. And honestly, sometimes like they're kind of just incentivized to like keep that thing occupied, so they keep getting their fee. So mm-hmm. you may not end up with the best tenants in a lot of cases. Yeah. And a lot of places where the prices of real estate look attractive compared to the rent levels, there's usually a reason for it. And it's because honestly, the kind of person that's going to rent there probably can barely afford the rent, if they can afford it at all, and are more mm-hmm. likely to sort of either trash the place, stop paying, have kind of different criminal issues. I mean, I personally had multiple properties in the same town involved in separate like shooting incidents where the houses actually got shot. One of them, a person got hit in the arm and was, injured. The others, mm-hmm. it was just property damage. But it's definitely not for the faint of heart, right?
Out of left field, we got PK Investing in the comment section. So it's like seeing Santa Claus outside of Christmas Eve.
J&J's a recent talc settlement along. Was that like for like the baby powder stuff?
I think so.
So that, and plus them spinning off the Kenview is like their healthcare portion that they spun off, right? Is mm-hmm. that correct?
Yeah, it's
honestly, when I heard they were doing that, I got less interested in J&J just because I like conglomerates that give you that conglomerate discount. Mm-hmm. And if they're spinning stuff off and whatever, it seems like it's because they want the share price to go up. And I want the discount, man. Like,
yeah,
come on, keep it all under one house. Give me a better deal. Daddy needs his dividends.
I would have liked if they just kept it all in one. I'm torn on
unless
spin-offs.
It's like pulling focus away. Like it could be a thing where, maybe it's like they can't make the business segments work well together, and it's pulling too much attention from the CEO or something. Like,
yeah.
I think maybe even like for example, the spinoff, the AT&T Time Warner thing.
Well,
I mean, they use that as a way to like unload debt and just refocus on their telecom business. And that might have been a good idea, but gosh, I feel like management at AT&T has sucked for a while. So,
I can't believe I got out of AT&T with a slight gain.
Whoa.
Yeah, I know. And I was buying like during high prices compared to now.
And so the share price was higher than your cost basis when you sold?
It was a little lower, but I had a decent amount of like dividends reinvested at lower prices.
So with the dividends, you managed a return overall.
I eked out, yeah.
Yeah. Okay. So what do you like better, dividends or buybacks in general?
Oh man, it'd have to depend. I like. So it's like asking me to pick between.
Right. Let me rephrase the question because mm-hmm. I think there's a better way to phrase the question.
Yeah.
Under what circumstances would you prefer a company do buybacks, and under what circumstances would you prefer them to do dividends? Because I think there's a different situation that would make one preferable over the other, depending on how the company is doing in a lot of ways.
If a company is being severely discounted for what I believe is to be rather a systematic issue or something that shouldn't be being sold off at all, for example, Target, I would say buybacks are more appropriate because that's what they're doing right now. But for dividends, I would say if you're a more mature company and you have the cash and you can't intelligently reinvest it back into the business, I would go with dividends. And you think that your share price is relatively high.
So when the stock is cheap, do the buybacks. If the stock's not particularly cheap and you've got the cash, do the dividends.
Ideally, I'd love a mix, but it's circumstances.
Hey, I do too. So speaking of a mix, I have a good little chunk of one of Warren Buffett's favorites, which is HPQ. Have you looked at HPQ at all?
I have not, unfortunately. Besides your one video, I've not looked at HPQ.
So pull it up on... HPQ doesn't get the same amount of views as some other stocks do, but I think they offer a pretty compelling combination, a 1-2 punch of both, solid dividend yield, potentially some room to grow it, but also a pretty good culture of doing buybacks. I believe the number is something like 40% of their shares bought back in the last 5 or 6 years.
I see a huge free cash flow dip in 2015. Do you know why that would be? They look really strong for a few years.
Hewlett Packard and HP became like separate companies. So there's HPQ, and then there's which is just called HP, and then there's actually Hewlett Packard. So there was some kind of a split off a few years back. But HPQ, I don't even look at the other company at all. I'm not even 100% sure what it is that the other company took with them when they split off. But HPQ is the one that Buffett's in and that I share with Daddy Buffett.
They're buying back a lot of shares right now, and they're trading an 8P ratio. 8 is pretty cheap. I'll be honest. And when I see a company now, especially after what I've been through, some companies, that's concerning. Buffett's in it though.
Yeah. Berkshire has. I think they actually added some in the last in their last filing.
Gosh, what does their business do? They just make computers, or
so HPQ is all right. I'll give you a little overview. Yeah. So they've got a few different business segments. So they've got the printing segment, which that's probably the reason it's so cheap, because people view printing the same way as tobacco, as kind of a stagnant and or dying business. That's probably going to be around for the foreseeable future. Yes, things get more and more digitized, but there are a lot of things that annoyingly in this world still run on paper, and they're kind of dinosaur things that are slow to change. And that's a big part. And it's also their highest margin business, sort of like for Altria tobaccos. It's sort of, there's some parallels there, right?
Yeah.
But they also have personal computing, workstations. So workstations are more like higher end, laptops for computing intensive work environments, 3D modeling and things like that. And they also have some in computing accessories and that sort of thing. And I think they even have some 3D printing stuff going on. I think they're exploring that as a way to kind of branch out into printing, but a more modern version of printing. So that's pretty well the makeup of their business. So the workstation segment, from my understanding, is the part that's getting the most growth, and printing has had some revenue decline, but that's kind of to be expected. Yeah. So that's kind of the makeup of the company. There's a nifty pie chart on their investor relations page if you wanted to ever look at it.
Oh, this is interesting.
Yeah.
It's financial. They're different. Let's look at their dividend. 10-year solid growth rates.
Yeah, it's been growing. But like, I think lately they've been more focused on the buybacks because of how cheap they've been.
Yeah, that's probably a better thing to do. Stock-based compensation impacted the free cash flow 18%. Revenue. They're up 22% last year. Wait, what? No, 4% last year.
Yeah, I would guess like revenue would probably be like slightly outpace long-term inflation. I would say is probably realistic for their rev growth. Like you're not going to get like 15-20% rev growth, I don't think, on HP.
Yeah. I don't know. I don't understand the business fully enough for me to buy right now. But at the same time, there are some metrics that do look pretty attractive.
Yeah, I think I think Buffett is in it mainly because of the buybacks. That's one of the reasons that he is in Apple. He talks about how his stake in the company grows just by him sitting there and doing nothing every time they do a buyback. He loves buybacks. Now, there's one Buffett holding that people can't seem to figure out why Berkshire has, which is Paramount.
Oh,
yeah, you're a Disney guy, right?
Oh, yeah.
Not a very happy Disney guy lately, from what I've seen.
I've been more angry about certain stocks. I think they yeah.
Well,
yeah.
Have you looked at Paramount at all?
No, I have not looked at Paramount.
So, would you still say that you're Disney more so than Paramount? Like, would you say Disney's the better
definitely
company? Yeah,
I would say so.
So,
but again, I think Disney's brands are just so. I don't know how they can mess it up. They have the best brands in the world.
They're managing somehow.
Yeah, I know. I know.
So
I don't know how they can continue to mess up.
What if I told you that there's a competitor that I think might be, as an investment anyway, better than both of those?
Not Netflix.
Comcast.
Ooh, that's actually all right. I've seen some of their financials.
Is it already on your like watch list or something?
No, it is not. But I've researched it in the past.
Yeah.
What brands do they own besides CNBC? I know they own.
Was there anything that dissuaded you from picking up some Comcast?
I mean, I feel like I already own Disney, and call it silly, but they are a competitor. I would just say I'm not totally on. I feel like Disney's brand value is arguably the best when it comes to streaming. Maybe they're competitive with Netflix right now.
Disney's got the most, I'd say, like in terms of like sheer numbers of recognized titles.
Yeah.
I think Disney is definitely the alpha dog in the room, right?
Yeah.
But like as a business, I don't know. They for some reason have not been able to recover. I mean, have you looked at their gross margins historically, what they used to be and what they are today?
Yeah. Not good.
And, so here's the thing. Like, I was really interested in Disney maybe last year. I was really looking at it closely. I thought, man, if they can get those gross margins back up, this is going to be a banger. Yeah. And I think a lot of people took positions in Disney thinking that by now they would have figured out how to be profitable on Disney Plus and that they would have gotten those gross margins back. I know people who routinely go to Disney parks and they're as busy as ever. Ticket prices are up, yet they're still packed.
Yeah.
Where the heck is all the money going? It's crazy to me.
2024 is a huge year for them. I'm holding a long time, so I mean, I'm not trying to really buy in. I pay attention to the news, but I'm not trying to completely buy in all the negative news right now.
For sure.
It's their park segment was another big reason that I bought too in the first place because it's so strong.
For sure.
But they just got to get past that hump of profitability on streaming.
Yeah. You know what's it's weird to me because pretty much everyone except Netflix that has streaming doesn't make money at it.
Yeah. Mm-hmm.
Which it kills me that. All right. So you tell me if this is crazy, but to me it seems intuitively like a company like Disney, if anything, should be the most profitable at streaming because they came into it with an existing library that was arguably already the best when they hit the market in like 2018 with the Disney Vault, all of the historical like Disney Channel stuff, all the
new stuff they're making.
And the new stuff, and now they've got all the Fox stuff. Like they've got so much, and every time they come out with something new, they can once it's finished with the theatrical release, they can throw it on Disney Plus, and they have all of Marvel now, all of Star Wars. How is it that they manage to not make money on streaming?
I am concerned, though. I am very concerned. I feel like their brand value has gone down last few years. Like, I do not feel like they have made, like, since Endgame in 2018 or whatever that was. Can you tell me what was the last, like, Disney movie that was huge in theaters? People were raving over
Spider-Man No Way Home.
I don't think they own it, do they? I don't think they own it.
That
Sony,
wasn't Disney.
No, I think Sony's on. I think Sony has Spider-Man. They might get a cut of it, but
Doctor Strange was. I mean, a lot of the Disney stuff was in it, but the Sony stuff was too. I don't know.
It's weird. It's really weird.
That's the last one I saw that might have been them.
Because I remember in 2018, the hype around Endgame, and like everybody's going crazy over it. It's kind of how people are going with the new, like, have you heard the movie Sound of Freedom? The new one that's about like sex trafficking, child sex trafficking.
Jonathan said it's Pixar.
It's Pixar, and it's
Pixar
just came out with a movie and everybody hates it.
Yeah. A lot. Is it I mean, I've heard it's kind of a similar issue with Target and Bud Light. It's the same kind of crowd, we'll say. The boycott crowd.
I don't know if it's that anymore. I really don't.
Yeah. Yeah. The one company I'm the least worried about in that whole thing is probably Target, because it's like I said, I think it's just.
I think people are already forgetting about it.
You think?
Yeah.
I will say I did check out the beer aisle last time I was at the store, and it did look like nobody had really touched the Bud Light, and like they picked up a few packs of Coors and Modelo and stuff. So
you didn't get a video of them choosing it?
No, I should have. Actually, I was in the grocery store parking lot, and they have a Western Union kind of inside, like at the customer service desk. I was thinking about scoping that out, so because I've got a little Western Union stock, got to do my due diligence and watch people buy money orders, film them, make them uncomfortable. Too. Yeah, be like, hey guys, people are still buying money orders at Western Union. I'm bullish. Because that's a good indication that it's a good buy, right? I almost went to the frozen food aisle and was seeing if they had any Tattooed Chef stuff there. I mean, at 11 cents a share, if people are buying Tattooed Chef, it might finally be a good value.
Tattooed Chef has disabled comments on their Instagram. Because I was going to look to see recently if like people were giving them shit about it, but I don't think they're having a bunch of hippies run a company was a great idea.
Yeah. That's not a business at all. Death Warder Public thoughts. Do you know what Jonathan's talking about?
Looking it up right now.
That's over my head.
Death Warder. Oh, I think I heard of this. It's like a beverage company. No, thank you.
What is it? I don't know.
I saw it on Instagram or Twitter somewhere today. It's like it looks like Monster Energy. I don't know if it's alcoholic or not, but it don't know much
Oh, is
about
it Death Water? Does it mean Liquid Death?
Yeah, Liquid Death. Liquid Death.
Okay. Yeah. It's funny.
What do they make?
So it's just sparkling water. Well, sorry, there's like just a regular water, and then there's like a sparkling version, and then there's some flavored sparkling versions, but none of it's like all no sugar and that kind of thing. It's kind of like if they put LaCroix in like edgy, like rock and roll metal band cans. Like the cans look like the design of like a band t-shirt, basically.
Yeah.
And actually the guy, I actually read an article about the guy that started Liquid Death. So basically he noticed like every time he went to like a music festival or anything that all the guys in the bands would be like basically chugging Monsters the whole time. Uh-huh. And he wondered how the heck they don't get dehydrated. And then he picked up one of the cans and it said in like small print under like the, Monster logo, it said tour water. So basically these are energy drink style cans that Monster puts out, but they fill them with water so that the guys on stage can drink them, the whole time and not get dehydrated. And he was like, well, what if somebody actually like sold water in like a cool can? And now they're estimated to be worth like $400 million or something.
I'll stick with Coca-Cola for my beverage companies.
Yeah.
And Pepsi.
I mean, but it's definitely a stroke of genius, and they could get bought out by, Coke or Pepsi.
Yeah, that's a possibility.
Coke's always looking to diversify, and they're one of the biggest players in the packaged water thing, I think they own Aquafina, Dasani.
And they own Dasani. Aquafina's Pepsi, I think.
Aquafina's Pepsi. Gotcha.
Yeah.
But yeah, it's funny because the cola wars, they have a proxy war in the bottled water space. They own like most of those brands you're familiar with in the bottled water area, I think are mostly owned just by Coke and Pepsi.
Another thing, I was concerned a little bit about Coke because I've been seeing a lot on social media, like fitness people are trying to like boycott. I wouldn't call boycott, but like make more awareness that Coke obviously is bad for you. But then I looked into Coke's like other beverage brands, and the same people will be promoting a different beverage, or they'll be nonchalantly or like not even knowing they're drinking like a Fairlife, which is owned by Coke. So I think they're.
I love Fairlife, by the way.
So
have you ever had Fairlife's ice cream?
No, I have not.
It's hard to find, but oh my gosh, it's so good. So are you familiar with some of the so-called light ice creams out there, like Halo Top and stuff like that?
I mentioned last stream. Yes, Halo Top. I like it.
So Fairlife has something like their ice cream is kind of like halfway between like Halo Top and like just regular ice cream. Mm-hmm. It's usually got like 20 grams of protein per pint, but like a bit less fat and sugar than regular ice cream. It'll be like in the 400 to 500 calorie area rather than like the 250, 300 like Halo Top, but it tastes so much better than Halo Top in my opinion. It's so good.
What I do with Halo Top, I got the cookies and cream, and I will get like 5 Oreo minis. I'll crush them up and I'll throw them in there, and it's so good. It tastes just like a Blizzard.
That's awesome. Yeah,
but only like I'll only eat half the pint.
Yeah, every once in a while I'll grab me a Halo Top because honestly, like the macros aren't bad. Ridiculous amount of fiber in there too. So like, if you need help being regular, everybody, go grab yourself a pint of Halo Top. It's better than Metamucil.
Not sponsored, not sponsored either.
Yeah, not sponsored. Yeah, maybe one day we'll get some sponsorships going on here. I'd love to be sponsored by Coke Zero.
I want to be a sponsor, not even for the money. I just want to make a funny ad. like a real creative
That's true.
ad, nonchalantly, diss Jeremy or somebody along the way without saying his name.
They do have to approve whatever your ad read is before you're allowed to put it in your video, though.
I'll get like Jeremy's straw hat. I'll get like a fake mustache. I'll be like a competitor of Fairlife's.
Hey, grow a real one. And then shave it off later. Let's see. Oh, this was a spicy comment I missed. John Stanky is an idiot. I don't trust him as far as I can throw him.
He's not wrong. Yeah. Stanky is a...
and that's a fitting last name, huh? He's stanky. He's stanky at running businesses. They should fire him. So here's a fun one. Who let's say other than Warren Buffett is your favorite well-known investor? Ooh. And also other than me, of course.
I'd have to say Jim. No. No.
Obviously Crashy would. I mean, Kathy would.
Dang, that's hard.
Hard one, huh?
Because I don't really study investors that much, as much as I. Favorite? Does it have to be a stock investor?
No. It can be any kind of investor. Someone that inspires you that you think people could learn from.
Donald Trump before politics.
Really?
Yeah. I got really...
That's a controversial answer.
I know, that's going to get a lot of people mad, but I would say Trump, when he was doing real estate. Because I read his book. Yeah, Peter Lynch is solid. I don't know if I have a favorite. That's kind of a fun one. But I read his... Oh, I have so many. I have a few popping up into my head. Could I say multiple answers?
Yeah, go ahead.
Bob Iger is up there because he invested in all the Disney brands, and I think he's the one who gets him out of it.
Man, we got somebody going for Keith Roaring Kitty Gill here. Chat, all of you, sound off on who your favorites are. Your favorite investors, other than Warren Buffett. Because if we allow Warren Buffett, everybody will just say Warren Buffett, right?
Yeah.
So funny enough, I think for me, it's tough. Like, on the one hand, I feel like saying Charlie Munger is like a little bit of a cop out because
that's how I feel.
Partner. But that's like the temptation is to say Charlie Munger because Buffett credits Charlie for teaching him a lot of things. We could go old school. We could say Ben Graham because he's like the OG, like the granddaddy of value investing in the first place.
Mm-hmm.
But as far as like people who I've seen say things on TV that I agree with, probably Peter Lynch. He says
I like Peter Lynch a lot.
Yeah, he says a lot of things that make I think a lot of sense. He speaks a lot to the emotional side of investing and how there were periods of time where he was getting 29% returns per year, but the average person in his funds didn't make that because they would sell off and then buy back in at the wrong times. And if they had just stayed the whole time, they would have got 29% a year.
I'm not a fanboy of Joseph Carlson, but I do like his investing style.
Fair
I know
enough,
you won't agree with that, but I'm not on Resi level. I've learned my lesson of copying people's investing strategies.
Jonathan, not Jim Cramer. I'm surprised nobody's mentioned Cathie Wood yet.
Oh, I was right on Cathie Wood. During the bull market in 2021, I made a video about Cathie Wood. It was probably my 5th video. It was at the peak of ARK's innovation fund or whatever.
Yeah.
And it's down a lot since then. And I'm happy.
Yeah. So, she basically was just what if we took every like kind of trendy tech company that doesn't make any money, and we just threw them all into something and we call it an ETF so that people.
And we charge an expensive expense ratio.
Yeah, she does charge for an ETF. It's one of the higher ones, isn't it?
Oh, it is. 0.75, I think.
Yeah, that's almost mutual fund level.
That's a lot of money compared to much cheaper options.
Yeah. Jack Bogle is another good one, especially for like the average person, because he is kind of the guy that sort of came up with the whole concept of index fund investing. So people who just buy VT or VTI or SPY or VOO. Yeah. Kathy Wood is something SoFi?
Buying.
Oh, she's buying SoFi now, huh? Is that a good thing or a bad thing?
Yeah, it kind of fits into her investing strategy.
It does. I don't necessarily like outright hate, or I was starting to get interested in SoFi when it was under $5, but the share price went back up too fast for me to make a final decision on it. This is an interesting one. The Jose here likes Martin Shkreli. Seems like that might be a half jokey answer. Yeah. So honestly, like I get it. Like everybody hated Shkreli for raising prices on stuff, but at the end of the day, like that was probably in the best interest of his shareholders, and he was a pharma executive. Like,
yeah.
Ooh. Jonathan owns a small amount of SoFi. Ooh. So, I mean,
Jonathan likes gambling, it seems.
I mean, you could say the same thing about me with my 100 shares of Palantir.
Oh.
But I mean, but also if you look at my entry point and where it's at now, it looks like I'm a freaking genius. But
what'd you buy at?
My basis is 622. I got assigned on a 650 put, and it subtracts the premium off of your cost basis. So
when'd you buy?
I was selling puts on it when it was anywhere under 7. I was selling puts. I don't do direct buys for most of the shares I own. It's mostly just put sales that I've got.
Jeremy Lefebvre over here. He's gonna start a course, everybody.
Oh yeah. I'll start an options course. Teach you how to 10x.
$8,000, but if you buy today, you can get it for $4,000, and a one-on-one mentor lesson with us, a mastermind.
It's a mastermind, and you can join the special super secret special private club Discord where we reveal the real secrets, and then you can come to an in-person seminar for only $12,000, like Grant Cardone.
And if you want to fly on our private jet, and you want to spend the entire day with us, you can ask us anything. $8,000 on top of that. Ask us anything.
Yeah, I mean, it's worth it, man. If you're an investing genius, and you get to learn how to 10x. Ooh.
You can go around and record people at Foot Locker.
Yeah. Ooh, look at that guy. He's trying on some shoes right now. Bullish. All reward without risk. So, when I was in high school, I was friends with this guy. He was like a year or two older than me, football player. He told me once, without risk, there is no reward. Good point. And that was more of like a life thing, not an investing thing. But I think that is pretty true, right? In a lot of areas. Ooh, Jonathan's offering to do a TED Talk.
Whoa. Private jet TED Talk with John.
Yeah, members only, guys.
John is also included in the mastermind call.
Oh, for sure. For sure.
Yeah.
Oh, yeah, by the way, click the join button, guys. Be a member of this channel. I only charge 99 cents.
Yeah.
for the basic membership. Way better deal.
And I mail you 3 stocks every month that are going to 10x. Hot stocks on the block.
Yeah, I won't actually give buy and sell recommendations because that's not one size fits all for sure.
Yeah.
Ooh. Here we go. This guy knows what's up.
Day trader over here.
Yeah. So the thing is, all right, and I've said this about Palantir, right? So just because I bought it and I'm up like 140% or whatever, doesn't mean that it was necessarily correct, right? Or it doesn't mean that the process was correct. Mm-hmm. Just like if you buy something and you're down 30%, it doesn't mean you were wrong to buy it, right?
Mm-hmm.
It's the same on both ends. Talk to me about how it's doing in 10 years, and we'll see if it was good or not.
Yeah.
Oh, risk-free rate of return SoFi offers 4.4% APY. I mean, yeah. The thing about high-yield savings accounts is, yeah, it's technically risk-free up to $250K, and realistically, the FDIC in these couple of bank failures that we've had, they ended up covering above that amount as well. The last thing they want is for people to lose their faith in the financial institutions. But for people who have substantially more than 250K, they generally won't go with a savings account. They will just buy treasuries in a lot of cases, even if it's about the same, because the treasuries to them are a little bit safer than if the money is tied up in an account where the bank does fail. It might take time to get that money back out. And if you're dealing with millions and millions of dollars, that time, the opportunity loss of having that money tied up in something like a failed bank could be the difference.
Get some hot stocks of the month here. I got my hot stock of the month. It's actually Funko.
So I'm curious, does anybody watch The Sopranos? Just out of curiosity.
Not me.
Not you. Okay. There's there is a small like side story arc that has to do with like a stock pump and dump in that show. So
Beyond Meat.
Beyond Meat. Yeah. Mullen. Oh my gosh. Yeah. Because EVs are the future, guys. So just buy Mullen.
They are.
Yeah. Oh my gosh. Beyond Meat and Mullen. What a basket of stocks that is. Palantir is great plus side. Yeah. So that's kind of the reason I got into Palantir. One, because they had a track record of positive free cash flow, even though it was small. 2, a lot of potential growth and upside. And, 3, the historically low valuation, right? It started to show signs of profitability just as the stock price was reaching its lowest point. So I figured if you're going to take your chance on Palantir, that was probably the entry point to do it at. And if it works out, well, great. I might see a really good return on the $622 that got invested in it. Heck, I could sell for a huge gain right now. But if it doesn't work out, well, it was like 0.5% of the portfolio, and it won't really be felt in the long run. One year worth of Altria stock dividends will offset the entire Palantir entry point. So,
it's a bit of a skeptical company that I actually owned. Not a lot of people know this. I actually sold it though. Shaggy.
Chegg.
CHGG.
CHGG.
They make like textbooks for college kids.
Oh,
and I sold.
Chegg.
They crashed, but I sold it before. $10 a share now. I sold.
Yeah, didn't they used to be like a place to get like paper books?
Yep. I sold it $70.
Oh wow!
Put in
Well,
Apple.
What did you buy at?
I sold it at a loss. It was probably $5-10 loss. Probably, but I think I bought it 80.
All right, so you got it like 80, sold it like 70. Yeah.
I
Oh
put
my
in
god.
Apple though. So a few years ago at Apple.
What's crazy? They're only at like a 5 PE right now, but man, they got just demolished.
I don't
But
get
I
their business
guess
model.
if
I don't.
you're in the paper book business, I don't think that's the future of where things are going. All right, Mullen 100 million market, going to 100x once it's at 10 billion. What?
It's too much knowledge to give away in the live chat. We might have to blur that out.
Yeah.
It's our hot stock to the.
Yeah, that's for the private group only. Shh. Hit the join button. All right. Mullen's trash. SoFi is up to 2 million FDIC insured. Oh, so yeah, I guess it is possible for the bank to buy additional coverage from the FDIC, but it costs the bank itself, I guess, more money. So yeah, if that's the case where they're insuring up to 2 million, then you're 4.4%. If you're like really, really cash rich, yeah, I'd probably park my cash. There. Yeah, that's pretty good. I wonder what M1 has, because M1 Finance, if you have M1 Plus, I think has better. I think they have like 5% on their savings account, but I don't know if they have extra FDIC coverage past the 250K. And I have a referral link for M1, so I am kind of shilling for them a little bit. Deposit $5K and you get a free $100, and I get a free $100. Free 2% return, baby.
Free stocks.
This ain't Weeble.
Oh yeah.
Actually, I was thinking about getting a Weeble, just because I've heard that their options interface looks really good, and I've been curious. Plus, if somebody signs up through your link, I hear that the payout is a little bit more lucrative than some of the other ones. But if it's a crap platform, I wouldn't call it anything but crap.
Have you got any referral link signups on M1?
Nah, because all right, for M1 to get the $100, the person has to like deposit $5,000.
That's hard for people to sign up to.
Yeah, and I don't usually put like my Robinhood one, just because all they do is give you each like a free crappy like $2 stock that doesn't make any money, and it's an unprofitable business that's about to go bankrupt usually.
Mm-hmm.
And it's like, not worth it.
Yeah.
Let's see. Ooh. BA and SMG. Yeah, I don't know
what SMG's Miracle Grow, I think.
Oh, Scott's Miracle. You know what? I did do a video on them once.
Wow.
Yeah.
Not proper knowledge. Jeremy Lefebvre over here. Let's see.
Yeah.
BA. That's Boeing. Ooh, Boeing's interesting. I was looking at buying them during the pandemic. Have they recovered? Let's see.
Oh, okay. So Jonathan says Robinhood is trash. I'd never use it. So it's easy to say that now, when everybody offers commission-free stock buying and selling. But I remember back in the day when like E-Trade was advertising like $8.95 commission per trade and stuff. People forget that once upon a time, if you didn't have a lot of money to invest at once, you could lose a lot of your returns to just commissions. Like imagine trying to invest $100 at a time if you're paying 8 or 9% of that in commissions.
Yeah.
It just destroys your returns. So Robinhood, in a lot of ways, made the stock market accessible to retail buyers. Like now, because of the lack of commissions, anybody can just open a brokerage account and start buying ETFs. You don't even have to, be a stock picker or anything. You just open a brokerage account, put a few $100s a month into ETFs, do that for 40 years, and you'll probably retire a millionaire, right? Like, and if it wasn't for Robinhood being the first ones to offer no commission trades, I don't think anybody else wanted to be the first one to do it because they were making so much money on their commissions. So I think we ought to give credit where it's due. Now, I'm not saying they're the best platform necessarily. I'm actually trying to get, I'm trying to get a little bit of exposure onto as many platforms as possible because I'm a nerd for these brokerage platforms. I'm like testing them out. And I would love to do like a tier list of which brokerage platforms I like the best someday. Definitely but currently my favorite is probably TD Ameritrade, which I haven't gotten switched over to Schwab yet.
God, you haven't?
No. Nope.
Oh, you're so lucky. Oh,
is Schwab that much worse?
No, it's just I love the old Ameritrade app.
Yeah,
I loved it so much. It was so easy. But I would say, I miss Ameritrade.
Yeah,
you'll get used to it with Schwab.
Yeah,
the fractional shares are definitely the best addition. That's my favorite.
So the only thing I, maybe don't love about TD is that the options do have a commission, but it's a low. It's like 65 cents per contract, so it's not that bad. But honestly, with Robinhood, you probably lose more than that to the bid-ask spread because you don't get as favorable of like an order flow on Robinhood as you do on TD Ameritrade. So like the 65 cents is almost worth it in that sense. So you had to math in $5 a trade for fees. Is that so, Jonathan? Is that like on an old school brokerage account that you were paying $5 a trade? Interesting. I didn't know Jonathan had been investing since the time of the transaction fees and whatnot. Yeah, those were not very friendly days for the retail. And I think that's probably contributed a lot to how much of like an inflated bull market I think that we've seen in the last like decade or so. Maybe because the market is so much more accessible to people with just random bits of money putting in these random orders for a few shares here and there. I think before, when there were all those fees, a lot of people didn't really invest outside of maybe like a 401k at work or whatever.
I still think there's a stigma around people think you need a lot of money to invest. I think it's gotten cut down recently, but I was talking a few years ago with one of my buddies about dividend investing, and he's like, "Don't you have to have a lot of money for that to actually work?" It's like, no, not really.
Yeah, no, it's just about consistently adding over time. Yeah, time is the thing you need more than money. I mean, yeah, if you have a lot of money, you can get started faster for sure.
Yeah,
like money helps everything, doesn't it? But time is like the best asset you have for sure. Stockpile charged me 99 cents per trade when I was doing $20 purchases. Yeah, at that point, you're not even, it's not even, almost not even worth it. Like, because yeah, that's like 5% you're losing in fees. You're not even getting half the market return. Even if you match the market, you're still losing to it by half at that point. Then all of a sudden your 401k with the like 1.5%, 2% or whatever that the fund manager charges seems like a much better deal. If you're getting, you're losing that much in fees when you trade. So another controversial topic I'm kind of curious where you stand on is, so one thing I noticed, and this I think crosses generations, millennial and Zoomer, right? I am firmly a millennial. I think you're technically Gen Z still.
Mm-hmm.
Yeah. So what I've noticed is that younger millennials and Gen Zers, like as they, age into their 20s, seem to really think that crypto is the way more so than stocks in a lot of cases. And it honestly worries me. So a few years ago, I worked on a small team with, a couple guys in their, mid to late 20s. And every other day they were talking about which coin they were getting into. And this was back when like Ethereum and Litecoin were like relatively new and weren't considered, weren't even in the same conversation necessarily as Bitcoin. And I would hear them go on and on for like what seemed like hours without ever really saying anything that meant anything. It was like, oh yeah, I'm getting in on this because the tokenomics, or like I don't know, just like a bunch of made up gibberish that they were talking about, on the like proof of stake, proof of work, yada yada, as though that means there's any kind of actual intrinsic value. What do you think personally of that the whole crypto craze?
It's stupid. I think it's stupid now. I think it's stupid in 10 years, and I thought it was stupid when it was up in 2021. I just don't. I don't get why people would buy. Besides the fact that Bitcoin once went up.
Yeah. I've heard, I can't remember if it was Buffett or Munger, but one of them had said that if you offered them all the crypto in the world for $25, they wouldn't buy it because they have no idea what it's actually worth.
Yeah.
And that made me think a lot, right? Because I sit here and I look at it and I like people say, oh yeah, I dollar cost average into Bitcoin. And I'm like, but like at what point is like Bitcoin overpriced? And at what point, like what tells you when it's over or undervalued?
Yeah.
And I have yet to have anybody actually give me a very concise answer on that.
I love when somebody asks Charlie Munger at like the Berkshire conference about crypto. He'll be like, it's stupid. I never buy it if it's at $1 or if it's $99. I don't care. It's just stupid. I would never.
I love how you bust out your own glasses for that to get all ornery. Yeah. But yeah, Charlie tends to get a little grouchy when people ask dumb questions at the meetings. Buffett's a little nicer, a little more soft spoken. Charlie's just like, F it, I'm 100 and you're an idiot. Go F yourself. It's like, oh, okay. I think I respect him a little more because he just kind of like says it how it is.
Yeah.
He doesn't try to be like, well, he's just like, no, you're stupid. Your whole family's stupid and crypto's stupid.
Buffett will be more like, we buy businesses and we don't understand it, and if we don't understand it, we're not going to buy it.
While chomping some peanut brittle from See's Candy and like slamming Coke Zeros. Yeah.
Mm-hmm.
That's the kind of flex out. Like they have like the like fancy looking like wine glasses, but they're filled with Zero. Yeah.
We bought a house. We bought a house in 1942 and we paid $5, and then Charlie will come in. That was $5 too much.
If we had to pay even $100,000 more for See's Candy, we were going to walk away from that deal. Oh man, those old guys.
Oh, this is another question. Do you think when Buffett dies, it's eventually going to happen, and he's old? It's a messed up thought to think, but do you think that will cause a dip in the stock?
100%, it'll cause a dip. I think if anything, that might be one of the only times we'll get maybe even a decent discount on Berkshire.
Yeah.
I mean, I don't think that Berkshire is going to like substantially change how they do business just because Buffett passes away.
Oh, yeah.
But the Buffett fanboys who only bought Berkshire because of how much they love Daddy Buffett and don't really understand why else they bought it, I think they'll be like, oh no more Buffett. My Buffett, I gotta sell.
Yeah.
But like, yeah, him and Charlie are, they're not getting any younger. They're
Yeah.
not spring chickens anymore. Although I love how they still have like all their mental sharpness.
Oh
Like,
yeah.
like they still know exactly. I mean, I have no idea if they could work a laptop or not, but like as far as like their business acumen, it seems like their faculties are still very intact. I don't sense any like Alzheimer-ness like you get with certain other very, very old people you hear talking sometimes. Oh my gosh. Oh,
It's not. I'm running it.
Coin has been killing it though. Is that Coinbase stock?
Yeah.
I wouldn't know if they've been killing it or not. So,
It's,
what is it about crypto that you think attracts people like in that like 18 to 25 age range so much? I mean, heck, it goes even further now. Actually, I had a dude in his like probably like 50s or 60s when I was talking about it. He asked me if I'm into any cryptos, and I was like, no.
I would
So
say
it is mostly younger guys, though. Would you agree on that? What do you think it is as a
it's gotta be brand value and the brand value for the average person that they see. For the average person that doesn't know anything about investing, they would view crypto as currency of the future, like diversification, and I think
yeah. I mean, you could buy like Pokemon cards, and that could be diversification too, I guess.
yeah,
Right. But at least you get a cool shiny little thing, little
yeah.
holofoil that has some letters and numbers on it. Um, So I have, some of my own ideas on why people are attracted to it. I think part of it is potentially a high level of financial illiteracy in. I think that people, in the age range like between our ages, we're never taught like anything really about how finances work, how businesses work, and how stocks just are pieces of business. They just see it as a thing that goes up and down on a chart, and a cryptocurrency looks a lot just like the same exact thing, only new, right? And I also think a lot of guys feel like maybe they're left behind by the traditional way of investing in the regular normal person financial system. Maybe they kind of like feel like it's a small club, they're not in it, and so they've got their own thing over here that they understand, or they think they understand that other people
I could see
don't.
people buying it to kind of develop a stigma or personality around themselves too. Like you want to be known of that as that, crypto guy at school. I don't know anybody I don't know a lot of people like that are known for that at my school, but
yeah, certainly I think that crypto related content online tends to get more eyeballs than stock related.
Yeah.
I think it attracts a lot more attention, and I think that the people who watch that kind of content are much more likely to do something like buy a course, for example. And I think it's a vicious circle because and I don't know if it's like intentional, but if those guys that do that know that crypto is a big nothing and they're still selling courses about it, pretending like it's the way of the future, and it's gonna be everybody's pathway to financial freedom and the promised land and all that, I think there's something kind of predatory and insidious about that.
Yeah.
Offshoot of that topic, I've noticed a lot of those same people are now really pumping things like AI on there.
Oh my dude, I've been asked so many times recently about my thoughts on AI. It's not even funny. By like just family friends and stuff. Like I'll be asked like, what are your like favorite stocks? I'll just say Microsoft, Kroger, and Target or something. And they'll be like, are any of those AI driven? It's like, oh, for Christ's sake, no, you're in a bubble. I do not like AI. I mean, I think it's so overblown.
So Jonathan thinks it's about F the man. So maybe, yeah, the feeling left behind by like the traditional, like the system, the powers that be or whatever. And he thinks that crypto did fractional shares better than stocks. I mean, I don't know. I guess there's maybe some truth to the fact. I mean, it is pretty easy to get a 0.001 Bitcoin. You know what I mean? But I do think it's more the F the man thing, though.
Yeah.
They want to, and he's got another. Yeah, no regulation, so anybody can talk about it. Yeah, that's the thing. They exist in this kind of gray area where it's like, is this a security or is it, is it nothing? Does anybody really have the authority to regulate it?
Logan Paul with that crypto.
Yeah, it definitely worries me for the future. I think that a lot of people are going to get. I think that more people get burned than make out well when it comes to crypto, and I think it's the people that know that there's not really anything behind it that are profiting off of people who are less sophisticated. I think it's mostly. I think that's what. And there's some people who just probably time it right, get lucky, or maybe do technical analysis or something and do well trading it or whatever. But I think the vast majority of people who are buying into any coin, whatever it is, are probably being taken advantage of in the long run in some way, shape, or form. And
they just assume it will go up over the long term, and then it drops 70% in a year, and they sell it.
Yeah, and I think the reason they think it's going to go up in the long term is because other investments, other things that are categorized as investments have done that. But the thing is, like, real estate's done that, stocks have done that. Yeah, okay, even gold has done that. But I view gold as like a commodity, and over a long enough timeline, commodities do go up just because of inflation. Real estate too. Stocks grow because global GDP grows and per capita GDP grows and population grows. Mm-hmm. So there's reasons for that. I don't yet understand the reason why crypto would necessarily go up forever. So how about gold? Precious metals or gold, or do you just think of it more as just a shiny rock?
I think it's solid bait. I mean, it's better than crypto for sure. I don't think it will. I mean, it's decent if you really care that much about diversification, I guess. But there's a decent amount of long-term solid evidence that gold goes up, from what I know.
Yeah. So it's funny about the regulations on talking about stocks, because I think, like, as just like a general kind of conversation, I think anybody can offer commentary. It's just you can't as like without certain qualifications have people pay you for specific advice on what they should buy or sell specifically. I think that's where the line is, more or less. Otherwise, I mean, like 90% of the people that talk about stocks would be breaking some kind of law if there was rules against just talking about them in general, right?
Yeah.
Like, certainly I don't think Meet Kevin, Jeremy Lefebvre, or who else, Stockmo. I don't think any of those guys should actually be making any specific recommendations for people. Honestly, I think the course sales are like borderline, like right on that line of what's.
If they can get away with that, we can get away with talking about Target and AT&T on here.
Yeah, I most definitely. But I mean, those courses of like, oh, how to beat the stock market, that is like right up there, like on the edge of, I think, what should be allowed, like, if not legally, like definitely like morally and ethically. Like, can you just imagine charging, like, just being some random guy charging people $500, $600, $1,000 or whatever to be a part of some mastermind or selling a course or something? I mean, Oh
I
my
think
gosh.
one costed $6,500. I saw.
I think I heard about that. Yeah, it was like, yeah, it was thousands. Just imagine like how high he is on the smell of his own farts to charge that much.
Oh,
Oh my goodness.
well, he's a master stock picker. What can you say?
I just can't just say it's not financial advice, and that makes it okay. Yeah. So the fact is that saying the quote that this is not financial advice and then giving somebody financial advice
Yeah,
right after it doesn't actually make it okay if like you're breaking some kind of rule. That's why I don't bother with the whole, by the way, this isn't financial advice. It's like, no, I'm just giving you my thoughts as they sit. And
Are you worried about that? Like, if
no,
we were to continue growing and we got up to the, thousands eventually, like long term, would you be worried about
no,
that?
no, because on like CNBC, like Jim Cramer will outright tell you what he thinks you should buy or sell, but because it's not
It's here to make you money.
It's because it's not specific. He's not specifically giving that advice to any specific individual, and he's not receiving any money for that advice. I think it's fair game to be like, this is a buy all day. Bear Stearns is going to be great, you know?
Yeah.
Oh, I'm so sorry about Meta. Is he not sorry about it anymore because it went back up, I wonder? He was crying on air that he regretted telling people Meta was a good company when it crashed, and now it's up even higher than it was before. So I don't know. If it went up, it was good. If it goes down, it's bad. Did
he actually cry on air?
Oh yeah, he totally cried about Meta. Yeah.
I gotta see this.
Yeah.
I gotta see this.
Oh, he's looking it up right now. Okay. Yeah.
I gotta see this.
Yeah, Jim Cramer tears are sweet. Jim Cramer's doing After Us. Okay. Do his recommendations cease to be valid?
Is the inverse Kramer ETF like actually well performing?
So I heard that it did. So what they do is essentially whatever moves Kramer says to do, they do the exact opposite. So if he says to buy something, they short it. If he says to short or sell something, they buy it. And yeah, from what I understand, they had like market crushing returns by just doing the opposite of what Kramer said. And I think that it's probably more of a coincidence or anything. Because I think he's basically the monkey throwing darts at a board, and I don't think that there's really all that much rhyme or reason to what he says. And so the fact that doing the opposite's working out well, I think is probably more of a coincidence. Well, all right. So you're going to complain about the expense ratio, but you have to understand expense ratios are going to be higher the more active the fund manager has to be, right? And that's because like a really, really passive thing like SPY, where they just rebalance to match the market cap weighting of an index, that's like they can basically automate that. And so they can charge 0.06%, but something where they have to like actually watch Kramer's trash show. And then
I just saw him cry, by the way.
Yeah. Did it bring a smile to your face? I hope it did.
I have been on CNBC for 40 years. And I talk about AbbVie because I get my migraines. I talk about Domino's Pizza because I like getting their pizza. And I'm sorry. I messed up. You're not alone, Jim. You're not alone, Jim. Morgan Stanley just downgraded as well.
You're not alone, Jim. You're not alone, Jim. Yeah. So, yeah, exactly. So, yes, it's pretty random. Like, But the reason that it would have a higher expense ratio is because they have to sit through his trash show and, you know, figure out what like all his recommendations are, and then like go execute the opposite trade, right? So that's more human input than what you would need to run like an index based thing, right? Heck, even the covered call strategy stuff, because it just has like a set rule of like what they do with like the strike prices and such. It's very, very simple, requires very little actual thinking. All the thinking went into just coming up with what rules they follow, and you could basically like have an intern run the account, basically. It would suck if they made a mistake, though. But reverse. There's a reverse Kathy Wood. Yeah, I mean, yeah. So I would definitely consider shorting her ARC Innovation ETF, buy puts or something. You know, I think it's hot garbage. Oh, how did I miss this? GME pump so many SEC funds. I wonder. So Keith Gill, aka DFV, Deep Effing Value, aka Roaring Kitty, I don't think he got in any trouble for that. He had to testify in front of Congress, but
Deep Effing Value.
Yeah, I love that guy. So I watched his testimony live when he was getting grilled by Congress, and he like had this prepared speech, and he literally like as part of his like when he introduced himself, he said he was not a cat. Some legendary stuff there. Like he was literally like memeing Congress live. Ooh, run/started by Bill Ackman.
Our private mastermind Discord will have to testify in front of Congress one day. Yeah. Somebody messes up.
That's my goal. I want to testify in front of Congress and be like, I'm not a cat. I'm an expert stock picker. I'm a cryptocurrency guru who also does real estate and NFTs and AI, YouTube automation, Chat GPT.
Oh, you know what's actually a pretty good investment? It's not stocks, Funko Pops.
Yeah, I'm bullish on Funko Pops.
Not the actual stock, but I have a bunch of Funko Pops. And I bought a lot of them like at $10 or $15, and some have gotten up to like 90, 100. It's actually very well performing.
Ooh, Ritz, the insider trading is only for the mastermind. Come on, man. What are you trying to do?
You not. Yeah, I have to give him a 1 hour long suspension.
Oh my Lord, he's giving away all our secrets. Come on, Ritz. Paying customers only.
Yeah.
Jonathan's a level 3 turtle. Oh man. So, do you play any trading card games? No Magic the Gathering, Yu-Gi-Oh, Pokemon, none of it?
No, I used to be big on Pokemon, but not anymore.
Really? When were you biggest on Pokemon?
Elementary school, so probably 2015, 2016.
Nice. So, who's your favorite Pokemon? I gotta know.
It's got to be the blue Charizard. I like Mewtwo as well.
What about out of the original 152 or whatever it was, 151? I forget exactly how many it was in the original deck.
Maybe Charmander.
All right, guess mine.
Bulbasaur.
Alakazam, buddy. Alakazam all the way. I'm bullish on Alakazam. Those purple psychic types, they're the coolest.
I love the old. But like now it's impossible to find like.
Wait, is Funko really publicly traded?
It is. It is publicly traded.
I didn't even know that. So I thought they were bullish on like.
No, I swear to God.
I thought that like they were joking about being bullish on the actual dolls themselves because it.
Like, the actual dolls like actually appreciate in value, but like they do have stock.
Beanie Babies once upon a time, but
yeah.
Jonathan. Jonathan's favorite's Blastoise. Okay, yeah, Blastoise is pretty good. Machoke, yeah. Mm-hmm. Yeah. Hey, Jeremy, when you're picking your stocks, don't machoke.
Funko, let's see. They don't have a P ratio. Negative profitability. Oh my God.
Yeah.
Yeah, they just had a bad quarter.
Yeah, it looks pretty ugly.
Oh my Lord.
Oh. Yeah, no. Definitely not.
Their free cash flow just. Well, it's bad. What
is it?
Here, it got bad. They were actually free cash flow positive.
Really?
In 2022, negative 98 million. 2021, 56.
What's their market cap? I don't have them pulled up yet.
413 million.
Oh, so they're not like a huge.
No.
Dang. That's crazy though. Oh, what was their free cash flow before it plummeted?
2021, 56 mil. 2022, negative 99 mil.
Ugh. That's disgusting.
It's rough.
Those are tattooed chef numbers.
Oh, and they haven't even had the 2023 ones updated, but they just had a negative 43 mil quarter.
Ooh, yeah. Ritz likes the Eve Ice transformation.
Eve Ice transformation.
Yeah, I mean, that's pretty cool, I guess. That's it. It's it. So, since the last time we talked, have you watched any Arnold Schwarzenegger movies?
No, not the documentary yet.
Yeah, you've got to. I think. Have you seen at least like the Terminator movies?
I've seen clips, but like.
Yeah, you got to go back and at least watch Terminator and Terminator 2. The rest of the movies, they can all burn for all I care. But Terminator and Terminator 2, I think you gotta give them a go. I don't think you'll regret it.
My favorite movies are Christmas Vacation, Halloween 1 and 2.
Oh, wait, which Halloween 1 and 2? The Rob Zombie versions?
1978.
Nice. So you with Donald Pleasance as Dr. Loomis and Jamie Lee Curtis as Laurie Strode. Yep. Okay. Yep. All right. And they credit Michael Myers as, don't they credit him as like the Shape in one of them?
He is the Shape.
Yeah.
Oh, that's
my
favorite.
And that banger piano theme.
Oh.
Hell yeah. So my favorite slasher franchise ever, Halloween. With like not even close. Like
yeah,
Jason and Freddy can all kiss my butt compared to like.
Then I also like Rockies. I just watched the Rockies, so I like Rockies. Christmas Vacation's got up there though.
So like Rockies in like the old school, like Rocky versus Apollo Creed.
Yeah, the old ones.
Gotcha. All right, that's cool. How about the Karate Kid?
I've watched it, but I'm not a big Karate Kid guy.
I find that there's a lot of overlap between people who like the old Rockies and the original Karate Kid. They kind of both have that really like 80s feel. I mean, I know the first Rocky was late 70s, but I think all the sequels were early to mid 80s. Well, in the original run before they came out with like some of the newer stuff like Creed and all that.
Oh yeah.
Which Rocky movie is your favorite though?
I couldn't. everyone has its own like special. I mean, I love the original. I like the one where Rocky's coach died and then he fought Mr.
Mr. T.
T. Yeah.
I'll pity the fool.
Pity a fool. And then I love the one in Russia. So
so Rocky 4. Okay. So Rocky 4 is probably, it may not be like the best made of them, of all the Rocky movies. Like there's something to be said for like the first two, because of like the rivalry with Apollo Creed and everything. But the fourth movie is just, it's got so much interesting trivia to it and everything. It's got and it's got like the epic quotes from friggin' Dolph Lundgren as Ivan Drago. Like,
yeah,
if he dies, he dies. Love that. Also, he literally almost killed Sylvester Stallone in one of their sparring matches.
I can see it.
He punched Sylvester Stallone in the chest so hard that it sent him to the emergency room, and the insurance they had for like the film set or whatever didn't want to cover it because they thought he was lying about how he got hurt. They thought he got hit by a car.
Oh,
yeah, Dolph
that's
Lundgren's
crazy.
a scary dude, because like Sylvester Stallone was pretty jacked in that movie, and Dolph Lundgren, like one punch, like just almost literally killed him with one punch. It's insane. Yeah. So yeah, that's Rocky 4 for you. You said Christmas Vacation's your favorite?
Oh yeah, it's up. I think it's tied with Halloween. It's my favorite.
It's funny. So you like holiday themed movies then in general?
Yeah.
All right. So there was an Arnold Schwarzenegger movie called Jingle All the Way. So
I'd have to wait to December or November to watch it. I can't watch it now.
Yeah, you gotta watch it this Christmas if you get the opportunity, because it's just classic Arnold Schwarzenegger. But you have to see some like actual good Arnold movies first, because it's a schlocky, Christmas comedy. But I think Arnold really shines. Oh, Jonathan, the old One Punch Man. One Punch. Yeah. This guy knows what I'm talking about.
Oh, a more recent movie franchise I really like, Diary of a Wimpy Kid.
Oh yeah,
it is so funny.
I haven't seen it.
No, if you're like newer, it was made in like 2010, so I don't know if it was just because I grew up with it, but the movie is so funny.
Yeah, I wonder who makes this movie. So I wonder what film studio made this. You got to be you got to be bullish on whichever company produced this film. If it's
Diary of a Wimpy Kid. What company's what movie?
Diary of a Wimpy Kid.
Oh, Disney.
Oh, okay. So I guess you already have the stock, so you're bullish on.
Yep.
If you that's the rule. If you're bullish on the stock, if you like the movie, you got to be bullish on the stock.
Yeah.
So, what's your favorite classic Disney movie? Since we're both Disney aficionados, you're bullish on the stock.
I'm looking. Oh, I'm looking right now. There's so many I could.
Yeah.
Probably not even thinking of right now. Disney movies. Can I say Star Wars?
I suppose, but I meant more like their animated stuff, like Snow White.
Oh,
blah blah blah.
Snow White. Oh, the Mickey Mouse Christmas one.
Wow, okay.
I like that. I'm a big Christmas guy.
Hey, I'm a big Christmas person myself. My grandmother was, she had a collection of like over 400 like different Santa Claus figurines and statues and stuff. And their house was lit up so bright on Christmas Eve, you could see it from outer space.
Oh,
no joke.
Nothing better.
Oh.
If y'all.
Do you own Microsoft or SNE? I don't have either.
What's SNE?
That's a great question. I know what Microsoft is, but
I know what SNE is too. I think Sony. Oh,
Snap-on. Wait, why would?
Wait,
that's a tool company.
Sony stock ticker. What?
So
he said Sony. He said Sony.
So
Microsoft.
I think Sony is only available on the Tokyo Exchange, isn't it?
Sony? No, I think you could buy Sony. You can buy Sony.
Are there like ADRs or something? I've never actually seen anybody cover it. Surprisingly,
I don't think. Nah, Microsoft all day. Even if it were just the gaming segments, I'd go with Microsoft too.
I mean, just to throw it out there, I would suspect, without seeing the financials, that Microsoft's probably the better investment.
Yeah.
I just think they've got more things going for them for the future. I mean, granted, I have a PS4, but the ticker apparently changed. Yeah, I was wondering why he was bringing up Snap-on in a gaming stock discussion. I'm like, what the heck is this? But yeah, like I would suspect Microsoft to be the better overall business for sure. Nothing against Sony, just that's what I suspect is the case. Do you care so much about, say, like domestic versus international?
No, not really. I mean, it depends. A lot of my companies that I own are international. Through business.
Well, hey, I've got some good news for you. So our Pokemon thing from earlier it's bullish for your Hasbro stock because they own Wizards of the Coast and they distribute Pokemon in North America. So bullish for Hasbro.
Yeah. Oh.
Don't mean to give you any PTSD about Hasbro, but
no, it's weird. Holding.
Yeah, it's in a strange little vortex right now, we'll call it. Yeah. Oh, okay. He has both, but more USA based. So Jonathan likes a mix. So I definitely think for future growth, other economies are going to grow faster than ours at this point. America is about as industrialized as it gets in the current world. I think, honestly, one thing I'm interested in looking more at, like, I think China is the obvious thing, but I'm really curious, like, what some good up and comers might be in India, because I think when they, get there in terms of per capita GDP, they've got the largest population in the world now. So when they
what about AI?
Yeah. Oh, what are some good Indian AI companies, guys? I got this really awesome Indian NFT that's based on the tokenomics of crypto from the Indian AI sector. It's really bullish. And they use their AI technology to produce content on Bollywood, and it's basically the Indian Disney. Yeah,
it's too much of our private stock mastermind Discord going to.
I'm revealing too much. It's the future, bro. You got to join. Only $500 a month. It's a discount. It's usually $6,000.
Yeah. Buy today. Yeah. It's a discount. Not tomorrow, though. So you got to buy.
No. Time's running out. You don't get a deal like this every day, guys. Oh, Jonathan's still got he's got Hasbro. So, Jonathan saying India, Japan, Australia, and also Canada. Now, I don't know. Japan's weird to me because they've got some like population decline and stuff going on. So would would we all agree that it's probably going to be more growth in areas where there's growth in the population more so than decline in the population?
Yep.
Because babies, they poop a lot and use a lot of diapers, and they eat a lot and use a lot of like bottles and formula and everything else, and hopefully get a lot of different like vaccinations and checkups and things like that. I'm bullish on population growth. If the population's growing, I think the economy is growing. Now, oh, all right. So this, what do you think about like the different things regarding like what companies are doing to mitigate their climate impact and all that? Is that really a concern for you? I mean, you're going to inherit this earth
Yeah.
after I am dead in the ground because I'm just, I'm over the hill in my golden years, basically.
I
So
mean, a big thing with climate change right now for me is a Starbucks shareholder that could potentially impact um, coffee bean like production long
yeah,
term. So that's a bit of a concern. I think though with climate change, a lot of it's kind of overblown. I believe that pollution is more people are or what these big companies are mitigating to, and I think we should do less to pollute. But I think climate change, I believe in it, but the Earth goes through different periods of climate, and I think right now we could be going through something potentially hot.
I mean,
So
it's
I'm no
103.
expert.
It's 103 degrees where I am right now. I would agree
Yeah,
that it's hot.
yeah. That's why you
Um,
buy AC stocks.
so yeah, I'm guys. My AC has been running nonstop. I am bullish on. I am bullish on Kenmore.
Yeah,
Yeah, and Sears. Oh wait, they're bankrupt. Ugh.
yeah.
Um. So I mean, somebody brought up the whole climate thing on when it comes to Altria because tobacco, is a crop, and
Yeah.
the areas it grows in could be affected potentially. But at the same time, you know, I think that overall companies tend to find ways to adapt to the changes in the world. Like the world's changed a lot since, um, you know, Coca-Cola has been around for over 100 years, and the world's changed a lot, but they've managed to stay relevant, right?
Yep.
And I think, your strategy of buying great businesses, what's something that great businesses have in common? They adapt over
Adaptability.
time. Yeah. So I think that fear mongering over it isn't really going to do you any good because, I mean, hey, if it's a worst case scenario, we're going to have a lot worse things to worry about than our portfolios to begin with, right?
Yeah.
So, and maybe piggybacking on that a little bit. What about when it comes to people saying about the morality of the different companies you invest in? Like people have things about Nike and the sweatshops and so forth. They have things about Apple and the factories in China with the suicide nets, Altria and the smoking and the lung cancer and whatnot.
Yeah.
Um, you know, does anybody ever bring that up to you? And how does it make you feel? What do you say back to them?
Oh, I mean, it doesn't get brought up as much. I just think that if we went through everybody's portfolio, me, yours, and everybody in this private mastermind Discord, there would not be one company that would be considered. If we really look deep, there would not be one company that's 100% clean. So,
Yeah.
I mean, I don't care. Like, I get it.
I would also point out, it's as like you said, not a single company, if you look everywhere, would have their hands 100% clean if you looked at them from like their founding up till now.
Oh, yeah.
But I would say even on the personal level, almost no individual it has their hands 100% clean, right?
Yeah.
If you want to complain about the ethics of Apple, what kind of rectangle do you have in your pocket?
Yeah.
An iPhone. If you talk about the morality of, Altria, have you ever smoked a cigarette?
No.
Have you ever, bought a vape pen and vaped?
Flavored air.
Yeah. Geez. I don't know what people complain about with regards to Microsoft specifically. I'm sure they have complaints, but are you saying you've never played on an Xbox, or you've never used a computer with Windows or Outlook? Like if you're using the products and services and like contributing, your dollars to these companies, you're kind of complicit too. Yeah. And I get it. It's not convenient to not use products that you find. It's almost impossible, really. But the fact is that in a sense, your hands are not clean in a lot of ways. Like if you try hard enough, you might be able to find like a more ethical solution to whatever product it is you use, but your life is going to be a lot less convenient if you do that.
Yep.
So, it's the price you pay to have this nifty little rectangle that has the internet on it, and that, lets you message anyone, anywhere in the world, any time of day.
Join the private mastermind Discord, link in the description.
Yeah, exactly. So, and by the way, if you're in the private mastermind Discord, don't feel guilty, because all of the money goes to feed the children. It's all going. Yeah, exactly. It's all going to charitable causes like my bank account and to Ryan's bank account, and also to pay Ryan's tuition.
And actually, guys, we're reinvesting back in these stocks. If you were in our private mastermind Discord, you guys would know that we're buying Realty Income right now for our 10x stock. And they actually have LA Fitness as one of their tenants. And I pay every month $20 to LA Fitness for my gym membership fee.
Yep.
So
it's bullish.
Going right back. It's
bullish.
It's a circle, whole circle.
Yeah, and I was thinking about flying Southwest Airlines sometime, and so if I buy my tickets with the money from the mastermind, and you buy the stock, the money goes back into the stock, and the stock goes up because of the money you put into the Discord, and your investment in that stock goes up. You see, it's wonderful. It really works.
A little too much to be sharing on live stream for the public right now.
Can't reveal all of our secrets, but trust me, it's bullish. It's bullish, guys. Yeah. All right, I'm a perma bull. This market's to the moon. So we have just passed the 2-hour mark. So any final thoughts, or are you going to save it for the Discord mastermind? Link in the description.
I think I'll save it for the Discord mastermind. You guys will need to join the description.
Everybody, you know what button to click. Click the join button.
Yeah.
Head into the Discord mastermind. And maybe most importantly, if you're not already, subscribe to the channels. Okay?
Yeah.
Mine's the one you're watching right now.
And become a member down below.
Oh, you
for
better.
Just 99 cents a month, 5 cents a day.
At that price, you can't afford not to.
I know. Okay. It's the best ROI you can make.
Exactly. It's probably the most bullish investment you can make. Okay. But also subscribe to Ryan's channel, because next week we're going to be on there. And if you want to see more beautiful t-shirts like this, that's
more 10x stocks,
Yeah.
You can't
miss more 10x stocks in the Discord mastermind, and you want to learn more about getting into the Discord mastermind, then you got to tune in next week on Ryan's channel. All right, guys?
Yep.
So take it easy, everyone.
Yep.
Stay in school. And by the way, do what now?
Do dividend stocks, not drugs. Have a good one, and join the private mastermind Discord.
Link in the description.